Anytime, good to go.
Okay. So when we talk about feeding 9 billion people by 2050, that's not the complete story. It's important to know what they're going to eat and how many people are going to eat what they're going to eat. There's been a very interesting study that has been carried out by the OECD, and they just try to make some projections about the consumption by the middle class in different parts of the world. And they look at the share of the different regions in the total. And in 2000, it's interesting to see that most of the consumption happens in Western countries and Japan. But when we look at 2050, we have a completely different picture. In 2000, China and India, their middle class was consuming a very negligible part of the total in the world. But in 2050, that's going to change. The two countries are going to consume more than half of what the middle class in the world is going to consume. And that's going to change the whole story. The study was made on all consumer goods, but in food we can expect similar situation. And what does that mean? That means that a lot of people will shift from the poor classes into the middle class. They're going to have more money to spend, and in particular in food. And what happens when people have more money to spend on food? Exactly the same as what has happened in the 20th century in the West. They're going to change their diets. They're going to move away from mostly a starch-based diet like rice and bread, and they're going to eat a lot more protein, and in particular animal protein, and in particular meat. To give an idea about what that means in terms of volume, just let's have a look at China. Today China consumes about 125 pounds per capita per year of meat. It's expected that by 2030 they should consume about 175. So if we look at what would represent an extra consumption of 10 kilos or 22 pounds of chicken meat by every Chinese, that represents a need to produce more chicken, which is the equivalent of 2 days US production. So that's about 20% of the current world production. If every Chinese wants to eat 10 kilo or 22 pounds more of pork, that represents an additional need of production, which is the equivalent of 2 days, or 5 times 2 days the Iowa production. And if they want to eat more beef, 10 kilos more of beef, that represents 125% of the current US beef production. So we're talking about huge volumes. And it's really interesting to see that India is not following the same path at the moment. Meat consumption is increasing, but not to the same pace. India is still a vegetarian country with a meat consumption on average per capita of about 10 pounds. So when we look at the future and feeding this growing population, if this growing population wants to have a diet which is much closer to the current Western diet, we're not talking just about feeding 9 billion people. Today, in Western countries, consumers have an intake of calories which is on a daily basis of about 3,500. In the US, before the recession, I've seen even numbers as high as 3,800. So basically, in Western countries, consumers consume about twice as many calories as they should from a nutritional point of view. And that's the same thing with protein. They consume about twice as much protein than they really need from a nutritional point of view. So if we want to produce all the meat that those people want, instead of what they just need to sustain themselves, we're going to have a very different situation. And in the case of meat, growing this consumption to Western levels, if 9 billion people were consuming, like today, the Europeans and the North Americans, that means that we will have to grow the meat production by almost triple it between now and 2050. So that's a lot of meat, but that means that's a lot of animal feed. And that trickles down in the production chain because that represents also a need for feed ingredients. And that's where the crop farmers are going to have a challenge. They need to be able to produce and to supply this need for animal feed, which is a consequence of this growing need for meat. So that's going to have some consequences in terms of how do you balance the demand and the supply. For crop farmers, the demand is going to be firm, that's clear, because the meat consumption is growing probably faster than what they can produce on the land. What happens when the demand is higher? Well, the prices go up. Very good year for farmers. The year after, well, then they're interested to produce more. They try to plant even more because there is good money to make. On the other hand, the meat industry is kind of stuck between the rock and the hard place. They see the price of the feed going up, and for many productions, the cost of feed is about 75% of the total cost of production. So that is very, very heavy cost. But on the other hand, they have difficulties to pass on the price increase to the consumers. The retail resist, of course, because they also want to offer something that's affordable for as many consumers as possible. They don't want to lose consumers. So what happens in a situation like this? Well, the meat industry sees the margin shrink, and then it's not growing the meat production as much as it could, or as much as the consumers would like, because they want more and more. And then becoming interesting, because the year after, so the crop farmers think, we're going to plant more because we're going to make more money. The meat producers are going to say, we're not going to increase all that much because we're not having very good results. And the year after, then the demand for animal feed drops a bit because the meat production is not as high as it used to be the year before. And there is normally, if the weather is fine, more supply from the crop farmers for feed ingredients. So then the markets of agricultural commodities is going to soften a little bit. The year after, the farmers, well, are not so adamant to produce more because the prices were not as attractive as the year before. But the meat industry has some relief about the margin, and then they know that there is more demand for meat, so they see an opportunity to grow more meat. And then the year after, what do you have? Well, meat production is going up, so the demand for animal feed is going up, demand for agricultural commodities is going up, and then the prices go up again. And then we have the circle that continues. And we're going to be in a very interesting situation for quite a few years ahead. There's going to be much more volatility, especially in terms of profitability for the meat companies. The crop farmers are probably going to have prices that are going to be firm with some volatility, but as long as we're not going to reach the point where we have a good balance between the meat demand, the meat production, the animal feed demand and production, and the crop production, then there is going to be a bumpy road until we reach that new equilibrium.